world shaking, and you feel your heart is breaking. Take my hand, no hesitating. When you're just so tired of trying, all alone you feel like hiding. Together we'll keep fighting. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains too high we can climb it. Fearless, we'll take in the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Can you see the sun is shining like a new hope? Feel it rising, coming over the horizon. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains too high we can climb it. Fearless, we'll take in the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. There's no stopping.
Good evening, and we're live now. I'm trying to. Okay, I'm coming along good on my blog. That's the outlet that there's always a delay on it, but the blog is showing it well. All right, and you're seeing me either on Facebook or my Facebook personal, and then I have a couple of Facebook pages, and I have my Facebook group, which, by the way, is doing very, very well. I like the group because the group is would be people who joined who are interested in purchasing and or selling a house, so it's very focused. So sometimes I think a group is better than a page. You'll have people who like your page and because they're friends of yours, and it's a nice thing that they do. But when you have a group, hopefully they join because of this interest of the group. So, but that's going well. I have about 439 members, and it's for a local group, for a local real estate group. That's right now, as far as I'm able to tell, it's the largest. There's some that are nationwide, they're gigantic, but for the Hampton Roads area, that's good. And I received a letter from WordPress, which hosts my blog, and that has had 5,000 viewers. And things, knock on wood, are going good. If anything I've learned is persistence. Being consistent and persistent is most important in business. You can't just show up here and there. It has to be on a regular basis. People have to know that you're out there. We all, including myself, we have like short-term memories right now. Okay, so if you think you told a person months ago that you're a real estate agent, that's not in their mind. And now let's say they're looking for a house and they're searching around for a real estate agent. a lot of times that just doesn't stay with a person. I'm not blaming the person. It's just the way we're put together. We have to constantly remind that we are out there and we exist. So to my real estate friends who are listening, that's a good topic. Okay, that you have to constantly remind people that you are in business and you're doing work and et cetera, et cetera, et cetera. So it's Saturday night. It's October 23rd. We're about a week and a day from Halloween, and really the gates open then for the holiday season. So this hopefully will be a festive time for a lot of people. Bring my mic a little bit closer. Hopefully, it's going to be a good time for many people. The only situation we have right now, well, we have a lot of situations, but we have the holdups at the ports with the products coming in from overseas. So people are saying, or our news networks are saying, if you want to buy presents for your children, especially the hot ones, and I would say also with electronics, you got to start early, like now, okay, to have them in time for the holidays. So that's what we're dealing with right now. COVID numbers are going down, which is good. Okay. So hopefully people are still getting vaccinated. But today's topic is a little, it's a very subjective one, because we're going to discuss our homes less affordable or unaffordable. And it's semantics, We know that home prices are going up, but what we're going to do is compare it to mortgage rates and hopefully increases in wages, which we have seen a bit. And let's go into our preview, and then we'll go deeper into the subject. And this is what we're going to talk about today. Okay, so this topic was on my blog this week. I sent out a newsletter on it, and I just wanted to go over it because it's a little tricky, and it's a way of explaining what's going on right now, and also the longer you wait, it might not get better. And when I say better, I mean when it comes to affordability of homes or your monthly mortgage payment. Okay. So to go over a topic that we've discussed a lot in the podcast is that we know that home prices have gone up sharply within the last year. We're talking from 16 to 18%, maybe some regions of the country 19 to 21%. When I do CMAs for my sellers, I'm looking at about an 18% rise in prices in the Hampton Roads area. And particularly Hampton, because I'm getting a listing this week and I saw about an 18% increase in home values. Okay, so actually throughout the year, we were coming towards the end of 2021, and a couple of my buyers really put their um, real estate search, their home buying search, on hold because of the increasing prices and the competition. All right. Many people putting offers on one house, usually within a day to 2 days of a house hitting the market. And one of my buyers who's bought two homes through me, he's an investor, and now he wants to move into a larger home, uh, has said, okay, I'm just going to wait it out because it's too mad right now. I would like a bigger house, but I don't need a bigger house right now. Okay. But the thing is that through all the articles that I read, whether it's from the Wall Street Journal or the Times or this one company I subscribe to is called Housing Wire, which really has focused articles on the real estate market and other items. I have to say that that they're all in conjunction. Okay, they're all matching each other, and they are all saying that yes, we've increased about from 16, let's say up to 21% in home values within the last year. It will continue to grow in 2022, but it'll slow down. They're looking at numbers at 5%. All right, so it's not going to be as crazy next year. But the point is that they're not going down. We don't see home prices going down. Like in 2007, we had this crazy market. Prices were way overinflated, and we had kind of a crash. We did have a crash, and then prices went down. We don't see that, and when I say we, I'm saying we. I'm talking about economists and mortgage bankers. All right, and we don't see that for 2022, as long as, and I repeat, as long as the economy stays strong. Now, as I stated in the beginning, we have a situation right now with supplies getting to the public, and we're having inflation. Prices are up because of the problems we have right now. Um, it goes back to manufacturing as well, because a lot of these plants are not manned for women and men workers as they were maybe a year or 2 years ago. All right, and along the distribution line, we don't have the truckers right now to get these products where they belong. All right, this is the situation we have, and even in the retail stores, we may not have the same amount of people to unload these trucks. So this whole process of getting your product from point A to point B is taking a long time, and we're seeing empty shelves or shelves at their minimums, and people want to buy. Okay, remember, many people were home for a year. They didn't go and take their trip to Europe or to any parts of the world. Okay, they did not eat out as much. Right, they didn't go to shows, and this money that they had for spending is now in their bank account. So they want to buy products and have a great holiday season, and so the demand now for products, for TVs, for iPhones. I actually have a Samsung phone, but for these products are now it's getting very, very tight. And we know that as well for the building industry, that a lot of these items that are needed to build homes are difficult to get. So that's causing an inflation. And the other question is, and I've seen shows on this and discussions, is we're at this midpoint right now, or maybe I won't call it midpoint, but a very crucial point now, where people have been home for a year and they're saying to themselves, I took care. If I have children, I took care of my children. I saved on child care, and maybe I could make it by staying home, and my spouse does work, one stays home. Maybe we could make that work, or maybe I need to find a place that perhaps has child care services on their base, on their plant, and they're looking for options like that, and they're definitely looking for higher pay. That's without question. Okay, and you might argue they're asking for too much, whatever, but that's the point. My question is, for me, is how long they could go. And when I say they could, I'm talking more of the entry-level positions, those who were working at the hospitality industry, the food service industry. How long can they go without bringing in income? Because now the additional benefits from unemployment have stopped. How long can they go? Or perhaps they might have found work in another industry where they're getting paid more. Right by us, they built a big Amazon plant. My God, there's so many trucks there. I know they've employed many, many local people. And these might have been people who were at the McDonald's and the Burger Kings and the Wendy's. Okay? So these industries are probably losing their potential employees to other industries. My wife and I had to go up to Newport News during the week, and we were looking at the signs. And by the Jefferson Common Malls, there were the restaurants there, and one was offering 11 plus an hour, and there was another sign, maybe about 20 feet away from it, another food service was offering $19 plus, and I think they all offered other things too, maybe healthcare, whatever. So we're at this point now, we don't know which way it's going to go. I mean, is it going to be that they're going to grab these employees and they're going to stay with them? I just hope they stay with that pay, okay? Because I always believed that we needed to raise the minimum wage. And I thought $15 was a good starting point. And even at $15, people think, oh, they're going to take it easy and not going to do anything else with their lives. It's not true. It's a difference between living at the poverty level and keeping 2 or 3 jobs just to make ends meet, and having maybe just one. I could do it, but now I have time now, because I'm not doing 2 or 3 other jobs, to take the courses at the community college or at a college or on an online institution, or maybe I have time now, if my company offers a management program, I could go into that. So I always have been a big advocate of raising the minimum wage. Now it has to happen. Without question, it has to happen. You could say that the government shouldn't set a minimum wage, but you want to know something? The workers now are setting it, okay, and they're waiting. I think for this area, $15 would be good to start off. I know some areas would need to be higher, but they're going to push the market that way, no matter what the government says, by setting a minimum wage. no one's going to work at $7.50 anymore, let alone the low minimum wage for waiters and waitresses. That's going to be a thing of the past. So it'll be interesting. When I was teaching, I taught economics as well, and this would be like a live current event situation to see how it goes and to follow it. And so we'll see what happens. But talking about what we're going to talk about now, whether a house is less affordable or unaffordable, one thing that goes into the equation is raising or wages going up. Now, I don't know if someone working at a fast food company making $50 an hour, I would have to times it by 40 hours a week and so forth, and whether or not they would be eligible for a mortgage. And if it is, it might be, they might be able to get a 2-bedroom condo. But they will now be, when we say less affordable, I mean, there was a point where it would have been unaffordable completely. They were out of the market for it. But with increases in wages, a house compared to about 2 years ago, it is less affordable, but it's not unaffordable. All right, so that's the difference. So let's take a look at our text for today. Put this on here, and I'll go to the left of it. Okay, and let me scroll down. So what this article is saying, upon this distinction, homes are less affordable, not unaffordable. Okay. So just grabbing into this area here, where I'm going to read, houses are less affordable than they have been over the last few years. They are more affordable than they historically have been. And why is that? Okay. The monthly payment required to purchase the average price home with a 20% down 30-year fixed rate mortgage increased by nearly 20%. That's about $210 per your monthly mortgage over the first 9 months of 2021. It now requires 21.6% of the median household income to make the monthly mortgage payment on the average home purchase. The least affordable house has been since 30-year rates rose to nearly 5% back in late 2018. So they're comparing it back to 2018. But what they add to this, and they say actually to a previous report early this year, Black Knight calculated that the percentage of the median household income to make monthly mortgage payments on and something got caught off here, okay, has actually decreased, okay? So what they're saying here, the national payment to income ratio, all right, it was at 23.6%, but it went back down to 21.6%. And so why is that? So they say the typical medium-priced home around the U.S. remains affordable to workers earning an average wage despite prices that keep going through the roof. Super low interest rates and rising pay, what we just talked about, continue to be the main reason why. All right? So while the let me get back on here. So while the prices have gone up because of our super low interest rates on mortgages and increases in wages, it's actually becoming more affordable than it was, right? So you have to put everything in perspective. Now, there's a couple of terms I want to go over. You see the word medium a lot, and I actually like medium better than the average price home. Because the average price home, if I look in the area, let's say I look at one zip code, that's the Italian coming out, and I want to say, what are the prices of the homes? Using an average price, if I would say take all available homes in zip code 23669, and let's keep it a 3-bedroom, 2.5 baths, all right, and we could see some as high as let's say 375,000, and I might get a couple that are at 259, 269. And there could be a couple of reasons why you have those low ones. They could be foreclosures. They're selling them below the market value. They could be short sales where the seller is trying to sell the house before they go into foreclosure. So it's priced lower. Because basically what they want to do is they want to pay off the unpaid mortgage balance. All right. So when you have these prices that, you see a lot of houses around 375, but then you have a couple at 229. So if we do the average, it's going to bring that average price down. Okay. And then that may not be the real picture of the housing market in that zip code. When we use the median, you basically look at the houses that are gathered by one price in one area. All right. So even though like I said, let's say the houses are around 375, you might have a couple at 259. You might have a couple at 400,000, but a lot of them seem to be gathered around 375. Well, that's your median price, and that's really, to me, the true value of the homes in that area. Average price is could be really skewed. All right. And so even here, they use the median price home. The typical median price home around the U.S. remains affordable. So they're talking about, again, the houses that are in your areas that most of them are surrounded by. And I like using that much better than the average prices. So with wages going up and with mortgage rates going down, we have homes that are still affordable. They're not unaffordable. Now, what I did too, and I hope this helps, this is another article that showed up this week from Housing Wire. I really like Housing Wire. As a real estate professional, they have a lot of good articles that focus in to the market. So the housing affordability improves for the second straight month. Now they use a formula here to calculate the housing affordability index. A 20% down payment and a 25% ratio of principal and interest payment to income is assumed. Index values over 100 indicate that a family with a median income had more than the income required to afford a medium priced home. And here you're seeing medium a lot. Okay. So again, with medium income, if they're looking at a certain area, now, like say for instance, if you have an area that's very close to, let's say the Navy yards where they're building the ships in Newport News, you could really use a medium income evaluation for that area because you have a lot of workers who probably live close by, and depending, of course, you're going to have your master welders with all these certifications will make a lot more money. But let's say if the average ones are just starting, they have their first certification and they're making $50,000 a year. All right. And that may be the median income for that area right by the Navy yards. All right. So again, going down to this section here, despite rising to 151.3 in August from a low of 146.5 in June 21, the housing affordability index is still well below its August 20th level of 165.8, okay, which was a year ago. It's not that prices have gone down. Let me keep on repeating that. It's because of the low interest rates. It's because of rising incomes. So was that confusing enough? The point what I'm trying to make, especially to my potential home buyers out there, and that I hope that you call me to help you find a home. But we can't truly predict the future, okay? We can make guesses where it's going, and the chances of that going in that direction, we could say this, there's a high probability that it will. Again, as long as we keep on top of getting down the COVID rates, as long as we keep the economy going, which a lot of economists say will happen, we will predict that home prices will still rise in 2022 around 5%. But again, it's not going to go up as it did the past year, 16 to 21%. But then not going down. We do not see home prices going down. We do predict that mortgage rates will start inching up. They're not going to go gigantic up, a big gigantic step up, but they will start inching up. All right, because if you have a strong economy, you don't need the interest rates to stay this low. So again, for my people who are waiting, you shouldn't wait that much longer. The competition is going down. It's not as crazy as it was 5-6 months ago, all right? But if you're thinking that home prices are going to go down and you're going to get a great deal in 2022, the chances of that happening is very, very low, okay? It's very, very low. So again, I do not recommend to wait if you want to purchase. Because if anything, if you wait till the spring of next year, prices might be up another 3%. I don't know if it's going to shoot right away to the 5%, but it'll be higher, and mortgage rates will be going up, and your monthly mortgage payment will be higher. Okay? All right. So let me show a little video on what Zillow thinks prices will be in the year 2022. Okay, so Individual videos, some experts say 2.2%, some say it's 5.3%. No matter what, they're going to go up, okay? Home prices. And we also feel that mortgage rates will go up. So don't put off your purchase much longer if you can. If you have to work on your credit, if there's other things you have to do, then you just have to do that. But don't think, well, the holidays is coming up. Sometimes the holidays is the best time to buy, because if people are putting their houses on the market now, they need to move. They might give you some more concessions. They might pay some of your closing costs, perhaps. But don't think it's the holidays and I shouldn't look. You get your best deals during the holiday season. Okay? All right, so that's all for tonight. I think I hear my producer, William Burgess, saying that we have a special guest in the audience.
Great news. We have a celebrity in the audience. He is an extraordinarily intelligent dolphin that helps enforce regulations in the preserve, assists Puerto Rics with rescues at sea, and keeps a watchful eye on Sandy and Bud, whom he has rescued or helped rescue from danger on numerous occasions. Ladies and gentlemen, America's Flipper.
Wow. Well, last week we had Lassie stop by. I guess it's like Animal Week, and we had Flipper this week. I remember watching Flipper was a little boy, on Sunday nights. It was great to see him again, and I hope he's doing well. I hope he's keeping a social distance between the other dolphins. If Flipper hasn't been vaccinated, he should be wearing a mask on the water. But as well as to you out there, be kind to each other. If you're not vaccinated, please do. And if you decide not to vaccinate, please wear your mask, okay? Remember, the greatest power we have is to love, and the greatest gift, each other. So I'll see you next week.